Hello, hello, everybody. Bigcheds. I'm coming to you. It's Happy Friday. Weekend's almost here. December 16th, 2022. This is the replay of the definitive debate. Does technical analysis work? It was moderated by CryptoCred, and it was myself, versus Algodtrading. And I'll leave it up to you to decide who won. Or even, I don't even know if that's important who won, but we had the discussion, and now with Cred's permission, I'm uploading this to my YouTube channel. It's going to go into the playlist here for Twitter Spaces. So I'm going to go ahead and start playing this, and I'll just be hanging out here in the chat room, and we can enjoy it together. So thank you. Let's get it going. I don't hear anything yet. Let's see.
Or the chat, perhaps, or the audience, I should say. Hit me with a 100 emoji if you can. Wait, do they have the 100 one? Yes, they do. Hit me with the 100 if you can hear me. There we are. Okay, we're fine. We're fine. Let me just invite Mr. Cheds, or hopefully he can request himself. And there he is. Okay, wonderful. Just need to get these emojis out of the way so I can actually. There we go. One moment. Requests. There we go. Oh, let me try Algod again.
Cred, you might want to give one of us co-hosts in case you lose like a signal and have to come.
That is a wonderful idea. Invite co-host. Here we go. Okay, and you can hear me presumably, right? I'm good.
Yes, you're fine.
Wonderful. All right. Well, we've got both of you here now. We're 1 minute past the start time. I'm aware there's all sorts of stuff going on, football and FOMC presser. So sorry to take you away from that. And for those listening in, the whole thing should be replayable for your, hopefully, your listening leisure afterwards. That depends on the two gentlemen on the stage with me. With that said, let's get this underway. So good evening, first and foremost. Thank you for attending tonight's debate. The title of the debate is Does Technical Analysis Work? More formally, the motion for the debate is Technical Analysis Works. And Cheds will be arguing for the motion, and Algod will be arguing against the motion. The format is the following, and this was agreed upon by both debaters. Each speaker will give an opening statement, no longer than 10 minutes, and then a free-flowing but moderated discussion will follow. The speakers may not intervene during each other's opening statements. Also, more broadly, I'd like to remind the audience and the debaters that we are debating the motion in front of us. We are not debating paid groups or who's the better trader or one another's characters traits. If the debate strays significantly from the motion at hand, I will intervene quite firmly. Hopefully, I don't have to do that. So this format works best if we focus on the soundness of the arguments that are being made and less on who is making them. Now, as far as our speakers go, first, Cheds. He's a technical analyst, trader, and author of 3 books, most recently Trading Wisdom, 50 Lessons Every Trader Should Know. He will be arguing in favor of the motion. His opponent, Algod, is a quantitative trader and crypto investor, most famous for his outspoken bearish views on the Terra ecosystem before its spectacular collapse. He will be arguing against the motion. Please remember that this is a debate. I am not implicitly or explicitly endorsing any particular views or actions of either of the individuals present. I don't even like myself, let alone anyone else, so that should be some guidance there. My focus is on facilitating a constructive discussion of the motion in front of us. My focus is not on policing the views or actions of either of the speakers, tempting as that may be, right? So with all that said, let's get underway. Cheds, given you're arguing for the motion, please begin your opening statement. You have up to 10 minutes, and I will let you know when you have 5 minutes left and 1 minute left, should you choose to use the entire allotted time. Please proceed.
Wonderful. Thank you so much. So appreciate everybody speaking, everyone listening as well. For those who don't know, check out Cred. For like my people, he does really good educational stuff. So definitely check out his content. I'm not like super familiar with what Algod does. A lot of people had said, essentially why even have this debate? But I think there's a lot of value in that. I kind of try to look at anything as a teaching moment, a teaching opportunity. So I guess this is controversial, but that's fine. Maybe it makes it more interesting. For many years, I've had a long-standing debate with a good friend of mine. FA versus TA. And does TA work? And I've been like honing my arguments with him, on and off for like 10 years. And it really wasn't until I learned to start to describe TA as trend analysis that he started to kind of come around to my side of the story. So that's kind of a brief hint at where I'll be going. A little bit of my background, cred, touch base on it. I've been trading for more than 15 years. I've been on social media for about 10 years of that, building up a reputation as a chart nerd, newbie helper. I'm trained in Japanese candlesticks, which I'll refer to as Eastern technical analysis. I'm trained in classical charting, Western technical analysis. I'm professionally trained, having taken the CMT level 1 certification. I have published 3 books. The first was a cancer memoir. If anybody's fighting cancer and knows someone who is, like, I'll just send you the book. Get me your email address somehow. You can find my contact on my YouTube at Bigcheds Trading in the About section. I just want to send that to you. Book 2 was Trading Wisdom. It's done really well, and thank you for everybody for that. There's a free version of that book on my YouTube channel at Bigcheds Trading, so make sure to check that playlist out. And I just published 2 weeks ago my 3rd book, Trading Quotes. It's 1 quote a day, 365 quotes, all original, my original material. Please consider checking that as well. I'm a founding analyst at Bitcoin Live, and I've been doing twice a week full market update there since 2018. Really kind of an amazing team. I work with Bob Lucas, Dean from See the Light Trading, Mark Dukas, Axel Kaibar, and of course, my fellow author and trader, Peter Brandt. If you haven't read his latest book, it's amazing, Diary of a Professional Commodity Trader. It's really kind of an easy read, easy to get into. That's a great book. So does TA work? And I'm arguing for the motion that TA does work. So what is TA and like what's the history of it? So technically, if you kind of Google it or technical analysis, it has 3 main principles. The first is that the market discounts everything, right? Everything we say is factored into the price. The second is the price will move in trends and counter trends. And then the third is that certain aspects of price action are repetitive. So you have certain things like a pattern. So those are kind of the main tenets. The way I describe it, I say that essentially TA, technical analysis, is the study of a historical set of data, price data, to identify a trend and then to understand where that trend may strengthen or weaken in the future, right? And what that does as a trader, it allows you to properly define your risk and to execute a trading strategy. You kind of look back. How did TA start? You go back to the, Eastern TA, Japanese candlesticks. In the 18th century, rice traders, this guy, Hama, discovered that essentially the psychology of the market, the emotions of the traders were influencing the price. And that's kind of where Japanese candlestick theory, got started. And it really wasn't popularized until 1991. Steve Nissen wrote the big yellow textbook, Japanese Candlestick Charting Techniques. And really, the psychology of the market is expressed in the candlesticks, the candle body, the progression of the body sizes, the candle wicks, kind of clusters, all that stuff. But with Eastern TA, what people, and I'll kind of touch more on this later, but what people kind of do wrong is they don't understand is all Japanese candlestick signals are short-term signals. So people kind of misplay their hand and overuse it. Western TA, classical charting, that got its beginnings really at the end of the 19th century, early 20th century. Charles Dow, first editor of the Wall Street Journal, and he kind of talked about, again, the market discounting all news. The price will trend, the trend will continue. Assume the trend will continue until otherwise, and then you have the primary and the secondary trend in these minor movements. Richard Schaubacher wrote the book in 1932, Technical Analysis and Stock Market Profits, a very popular book. And then Edwards and McGee did their book in the 50s, kind of, updating it a bit. And, still wasn't, TA really wasn't respected that much back then. But you kind of fast forward to now, and really any investment firm, anybody, they have to have a trend analyst, which is kind of why I made fun of Michael Saylor for buying, from the top down. Like, how does he not have a trend analyst on his team? So that's the history, essentially, a very short, perhaps a little bit sloppy history, but that's a history just to kind of understand where I'm coming from.
5 minutes.
Why does TA work? TA works because trends exist. supply and demand exists, right? We have areas in the chart where the price tells us there's buyers. We have area in the chart where the price tells us there's sellers. And what this does is it helps you to properly define your risk. Without volume, without a functioning liquid market, TA won't work, right? So you need a liquid market with buyers and sellers. You need price history. You can't just have a couple data points. That's not a price history. The price is the truth. It's the summation of all known information. So I can hear a great argument about what Bitcoin should be worth or what Tesla should be worth, but at the end of the day, the price either holds support or it does not. All right. Why do most people fail at TA? All right. Well, most people fail at TA because they try to oversimplify it. This pattern does this for me, or I can draw this trend line, and this will work for me. But very few people actually have taken the time to read a textbook or study TA professionally. They tend to overcomplicate things. They use too many indicators, and that's how they get into trouble. That's from the analysis side. From the execution side, they are uncomfortable admitting that an idea failed. So they hold on to a loser and they ride it all the way down. That's why most people fail at trading. That's why many people fail at TA. They can identify head and shoulders, but they don't know how to play it. They cannot identify where that pattern will confirm or where it will invalidate. It's much more important to know how to trade a cluster of price than to identify it. Okay. So essentially, to summarize, is that TA is trend analysis, understanding where the trend may strengthen or weaken in the future, and that allows you to structure your risk. Every trade idea must come from a well-defined trade thesis, and then you need to know when that thesis fails. I'm bullish because the price is above 100. If the price now falls back below 100, my thesis has failed. Why 100? Well, the price has respected that level the last 8 times it bounced there. I'm using TA to identify a pivot level. I'm now executing my strategy and I'm defining my risk. TA will help you define your risk. I'm really curious to hear Algod's arguments. I don't know if I'm pronouncing that right. Algo's arguments. I scanned a little bit of his tweets to try to make sense of it, but I'm kind of going to remain open-minded, and I'm really kind of looking forward to hearing the case he presents and then doing my best to counter it. So thank you.
Thank you, Cheds. We'll now proceed to Algod's opening statement. You have up to 10 minutes. Please go ahead.
Perfect. Thank you very much. So yeah, a bit about my background. Besides doing some venture stuff, I also run some strategies. It's arbitrage, general arbitrage, some directional strategies that are mostly based on sentiment. First of all, what I want to correct is I don't think TA works in the way that people are using. I think there are complex non-linear patterns that you can identify with machine learning. That part might work with TA, but it's much more complex than what Cheds is claiming to be working. So how I see the market is actually the market is like playing chess, right? But the issue is with unlike chess, the components are changing 24/7. So you're pretty much trying to apply a system that worked a week or months earlier and try to play a whole new different game with it. So imagine pattern recognition is very easy. Now you have everyone saw ChatGPT, they saw Midjourney and DALL-E. Machine learning will be dominating the space, and all these patterns that Chat is mentioning, it's very easy to identify. So I can't really see why he thinks he's superior to an algorithm, because it's a lot of people tried to brute force data, and what actually happens is you have a system that is prone to overfitting. Then let's assume that TA works. What he's trying to do is he's using one system and he applies it on so many markets. Everyone that trades seriously knows that if you have a system, it only works specific for one instrument. If I have a profitable system on Bitcoin and I will apply it to ES or something or oil, it won't work. So that by itself, it makes all these theories quite flawed. Then there were a few more arguments about self-fulfilling prophecy, which is, you have two arguments, right? Most of the flow, even in crypto, is institutional. They're not, the majority doesn't really trade manually. And even if it's self-fulfilling prophecy, everyone, their short interpretation is quite different. So maybe in the 80s, TA was more likely to work, but now machines are dominating the space. So he talks about trend detection. The issues with trend detection is really complex. I mean, maybe we can sort it out in DMs, and he can give me his golden grail, and I'll build a system out of it, because it's incredibly difficult to understand how trends work. So people that claim to see a trend purely on technicals are even quite naive. We can actually generate all data and forward test it. I'm pretty sure that he has no edge with using technical analysis to see what trend this is. Because what people tend to forget is you have to start to understand in your system what has the predictive power. And it's like, imagine we are looking at the past months. We had so many, like, we had black swans. We had we had war, we had like FTX, we had like FOMC, so many things that interrupting with the price data, and we're still believing that historical price data is going to predict the future. So even if he has like a head and shoulders, and then you have like FOMC, and the pattern plays out, or it breaks up, or whatever it happens, it's entirely random, because he has zero clue what is going on outside of the market. So what I think, there are maybe profitable technical traders, but I think their directional bias is the only reason they're profitable, and you can literally flip a coin on their entry or exit, and they will be equally profitable. So yeah, I think that's. I'm going to wrap up here now. I really want to go in a dialogue and tackle the points I made, because it's really hard to see how we can answer those.
Okay, wonderful. Thank you for the opening statement. We'll now proceed to the hopefully not very moderated discussion portion of the debate. You can pick up on any points that you like. I'll stay hands off unless I feel that it's gone wildly off topic, and hopefully you can afford each other the courtesy of not making me do that. So, I mean, Chad, just want to respond to anything, and let's just have a chat, frankly.
Well, I think credit depends on what you mean by technical, and it depends on what you mean by analysis. No, I'm just kidding. So there's a couple, and again, thank you for participating, Algo. I think this is valuable. So a couple things you said that I can just say is just not factually true. In terms of like data saying there's no edge, I'm not sure if you're familiar with the author Thomas Bulkowski. He wrote a couple books. One of them is called The Encyclopedia of Chart Patterns, and the other one's called The Encyclopedia of Candlestick Data. And he took 30 years of price data. And really what that tells us is something like an ascending triangle is 72%. This is off the top of my head. 72% likely to continue bullish, right? The numbers have already been run on these things, right? So, for example, and this is why it's interesting to take the data, which I think you're headed in the right direction. You're wanting data, but actually the answers are there for you if you're kind of willing to look for them. So, for example, Steve Nissen wrote in his candlestick book that like an inverted hammer, which is a small real candle body, which is it's a spinning top with an upper shadow at least twice the size of the body. That's supposed to be a reversal, a bullish reversal candle. But when you run the data on it, 63% of the time, it actually leads to bearish continuation. So we have kind of the evolution of technical analysis. And now with the machine learning, you talked a lot about that. You talked a lot about systems. But now we have all this data. We've actually been able to show in both the Encyclopedia of Candlestick Charts and the Encyclopedia of Chart Patterns, there is data, probabilistic data behind this. It's like poker. I have pocket aces. You have pocket twos. We go all in pre-flop. I'm 84% likely to win. You may get lucky on me, but it doesn't mean I shouldn't have done what I've done. It's all probabilistic. So to say it's 50-50, I mean, that kind of, goes against what we know, kind of established facts. Again, you can check out the work by Thomas Bulkowski. You make some decent points about like the FOMC. I'll wrap up and I'll let you respond. Thank you. So you make points about like the FOMC and a head and shoulders. But it really doesn't matter. That's all stuff outside of the chart. You have to execute your trade based on the information inside the four corners of the chart. It's like a contract. We have a contract, and you can say later, oh, we made a side deal. But the judge will say, no, only thing that matters is in the four corners of that piece of paper. It's the same thing with the chart. No matter what, the price holds support or not. So with my head and shoulders, all I have to do is identify my trigger level and my invalidation level. Will I get stopped out? Yes. May I get whipsawed and stopped out? Yes. So then I have to decide how many times I'm willing to apply my trade thesis before I'm going to say, this level is no longer a level because the price is no longer respecting it. So no matter what, the TA allows you to define your risk. And I'm happy to hear your response.
Cool. Well, I don't think you fully understand the difference between correlation and causation. Well, correlation doesn't mean causation. So, for example, you can pull like 30 or 40 years of historical data, and you can find like a certain candlestick, and maybe it was a 63% trade that would go in your favor. But that doesn't mean in the next 10 months it will have the same results. I think that's very naive to think. All these small patterns, they're driven by outside events that you can't understand. What I don't really seem to understand, and this is like what I really want to have an answer on, by the way. How can you think a very simple pattern? It's really easy for me to make a system with the rules you're mentioning now. For example, candlesticks, it's easy to identify what kind of candle it is. These strategies have been tested quite a lot. So why don't you think why do you think if machines can't be profitable with those easy pattern recognition, why can you? I don't understand that point.
May I?
Sure, yeah, sure.
Sure. I mean, I'm happy to talk about it. Japanese candlesticks are really tricky because it's one of those things where a little bit of knowledge can be dangerous. So you think you know something. Oh, it's a hammer candle. I can just go long. But you have to understand context. Everything is context. So a reversal candle needs a trend to reverse. Okay. 10 bars sideways into a hammer candle isn't much of a signal, but 10 bars down into a hammer candle, that's a pretty good signal. Number one. Number two, you would ideally want that reversal candle to come somewhere, at the lower Bollinger Band, somewhere at the bottom of the range. That's point two. You can combine candlesticks with Bollinger Bands. Number three is the volume behind it is critical. The strength of any candlestick signal is based on the volume behind it. So could you automate those things? Sure, but you have to apply your judgment as well. You have to apply your judgment. If you want to use the system, that's fine. I've never been into that, and you're speaking from.
Can you elaborate?
Go ahead.
What judgment, please? Because that's you have to
the
be
judgment
more
of a trader.
Judgment.
Sure, the judgment of a trader based on your familiarity with the chart. Anytime you trade a chart, you need to have some muscle memory on it. It should be something you've studied and with a comfortable level of familiarity. What TA does is it allows you to contextualize volatility. So it's your judgment as a trader, having studied the ebb and flow of that chart, and understanding and having a gut feeling about what it means. There are no perfect systems. If there were, we'd all be out of a job.
So are you familiar with autonomous driving? So you can
with
pretty
what?
much, like self-driving cars, for example. Like you can train a system, you can use like thousands of hours, millions of hours into a system, and it can self-drive. So you're saying you're superior to a system where I can put like millions of hours of chart data, and you will still have a better understanding of the chart than a system where I put 10,000 or millions as much data that you can ever do yourself.
I mean, it's an interesting theoretical. I've never tested it. I've never tried it. I've never needed to or wanted to. I'm a trend analyst and a trader. And I've found that technical analysis works because you can identify a trend, and everything you're saying, if it matters, the price will hold support or not. You don't have to overcomplicate it. You don't have to come up with an interesting theoretical construct of me going against the deep blue machine, right? I have a chart. There's a trend. It's going to strengthen here. It will weaken here. And then I have to apply my risk as a trader. I have to come up with a defensible trade idea. And I have to define where that trade idea fails. That's it. You don't have to get overcomplicated, right?
No, but
and
like,
I'll let you respond. Let me just make. Okay, go ahead.
Yeah, I'm not overcomplicated at all. What you're like listing now is like very easy rule-based trading. It's the easiest thing to make a system out of it. Even machine learning would even optimize how to properly identify those 10 candles down and what happens with the volume. They will even see patterns that you're not able to see, and then you might say, yeah, they might overfit, but you can easily smooth it out. So I don't understand how it's so easy to implement in a system what you're mentioning. And it has been tested before. You can ask every algo trader in the room here, and they will agree with me that you can't just use an Ishimoku strategy, apply to different markets, and come with like profitable results.
But are we arguing the same thing? You're arguing for the benefit of developing, an amalgamated trading system. I think that's fine, but that's not something I'm interested in or ever felt the need to do.
I'm saying your strategy is flawed. It can't work. I tested it extensively. A lot of people tested it extensively. Right. And I think that's my whole argument. And
okay, if it doesn't work for you, that's fantastic. If we all traded the same way, then I mean, okay. Go ahead. Make your point. I'll respond because we're getting a little bit.
let me
We're getting a
propose
little
you
bit over
something.
each other here, so go ahead.
So if I can show that your strategy doesn't work, and I can show it with a backtest, will you agree with me that your strategy doesn't work? We can backtest it, we can forward test it across different markets. I'm pretty sure your candlestick pattern stuff is not reliable. It can't work. It has been tested multiple times before. Simple pattern trading is bogus.
It's just not true. I can show you a textbook right now. It's done all the analysis. It talks about candlesticks. It talks about chart patterns. Just your argument relies on the idea that just because an ascending triangle based on 30 years of price data, shows that it's 75% likely to continue, it's probably not going to work in the future. That's not a strong argument. Just because you don't like the existing data, right? We have data. We have data that backs it up. And for you to say that technical analysis doesn't work, you have to prove that trends don't exist. Right? Trends exist. And if that's your argument, that's a tough argument to make. Right? TA is trend analysis, identifying the trend, and then understanding where that trend will strengthen or weaken. Right? Why doesn't it work for everybody? Traders suck. We're emotional. We have poor discipline. I can come up with a great trade idea, and based on TA. If I fail to execute it, does it mean the TA failed, or does it mean that I suck? I was drunk. I was impulsive. I was emotional. You have to be very careful with what you're arguing. There's so many ways to trade. You're in love with system trading, and that's wonderful. If we all traded the same way, the price would be this. The price would never move, and I don't want that.
Okay, sure. So you're pretty much arguing because people are emotional, it actually causes some kind of inefficiency in the market. So you're pretty much saying if you have a system that has zero emotions, the inefficiency should be abused instantly. So big institutions would instantly arb the inefficiency out. I think that again is a weak argument to say, yeah, traders are emotional with the trends, by the way, and that's why I said in my opening statement. I think you say a lot of things. You say a lot of vague predictions on the timeline. I don't want to become too personal.
Can you give me one example? No, just give me
for
one
example.
No,
Yeah,
not relevant. Not relevant. Fuck the personal examples. Let's stick to the premises, please. Thank you.
I mean, you can. Yeah, I was just going to say, if you say the Bollinger Band is squeezing, it's really hard to still make a system out of it, right? So I don't really understand why you're saying TA, the emotions are pretty much ruining with the profitability of people using TA, but you're how can I not just automate everything what you say? You should work with a developer. You should make a system out of what your trading strategy is, and you will be the richest guy in no time then, right? Mm-hmm. I don't understand how that can work.
So just very quickly,
go ahead.
This might help as a sort of flag, if you will. Is there anything inherent to the nature of TA which makes it difficult, if not impossible, to automate? Because clearly this point of being an automated strategy and systematizing things is a bit of a sticking point. So when it comes to sort of, as you mentioned, muscle memory based, experience based, sort of discretionary assessments of the market at a given point, as opposed to sort of patterns and isolation, etc., is it your view that makes it almost impossible to automate your TA strategy or broad TA strategies in a way that will be satisfactory to someone more on the quantity side?
Yeah, so it's a good question. I've never tried to automate anything, and so I wouldn't know. It's not something I've ever tried to do. I will say what's maybe the best way to answer your question is what might be missing from that is sentiment, right? But let me just finish that point. But I want to make this briefly in terms of the emotions. That was one of the reasons why I mentioned why traders fail at executing TA, and we're inherently emotional creatures, and managing our emotions is actually harder than learning how to read a financial statement or a white paper or anything else. So I don't know that you can really deny that emotions are one of the biggest problems for traders. But in terms of automating a system, you also need sentiment, and I've been very clear that technical analysis plus sentiment analysis will beat any other method you can throw at it. Right. Oftentimes sentiment, and maybe I'm making a different argument when I'm just talking about how good sentiment is, but sentiment gives you a good sense of what the market participants are doing. They can often alert you to start looking for a price bottom. But at the end of the day, you still have to execute your trade, based on a defined trading thesis. Could I automate my strategy? Sure. I could try to. Is that something I'm trying to do or wanting to do? I don't feel anything's lacking. My TAs worked great. I had an unbelievable 2021. I had a great 2022. I'm having a lot of fun when I'm doing it, and I'm enjoying, I'm enjoying the fact that Bitcoin is pretty easy to do TA on, and it seems to work kind of scarily good. So, if it ain't broke, don't fix it. But I respect that if you're the type of person, the way your brain works and the way you want to do things, that you want to put everything in a spreadsheet and have a computer run it. I mean, that's great. It's just not my style. There have to be you have to allow for different styles of traders. Go ahead.
To make it very clear, I don't think that's my argument at all. Like that we are two types of traders. I'm just bringing my argument in that your strategy can never work, because if it would work, it would be already been abused to its fullest. If you want to have an edge, you need to have like an edge that nobody knows about, or if inefficiency will be arbed out by bigger players instantly.
But for that to be right,
that's how trading works.
For you to be right, you have to make the argument that trends don't exist. Like, I don't understand the argument. No, it's just not a very clearly described argument. Like, trends exist, supply and demand exists. You can't deny that, right? So how do you square that circle?
My argument is that trends are not made by TA. Trends can be made by like other things. For example, during the COVID crash, then we had like the stimulus checks, and events like that, they create certain trends, but it's still incredibly different. And I'm not sure who else did it in the past, and maybe some supercons they did it before. But to have like a clear understanding what is trending and not, and how long it can trend, and when it will go sideways, is actually incredibly difficult. I mean, and that's why I don't really understand. Is like how your approach is very simple, right? And you're pretty much saying that sophisticated systems, they can't replicate what you are doing, which is what you are doing is very easy to implement by everyone. Every guy can just go to Baby Pips, Google a few patterns, and they can copy your trading style, and it should always be profitable. And then you're saying that the emotions are interfering, but then I argue if you put it in a machine, it's still not profitable. And I think that's where it's pretty hard for me to understand where you're going. And
I'm happy to try to.
Sorry, I'm going to finish this real quick. At the start, you said everything is in the chart, and now suddenly you're like turning around a little bit, and you're already saying, yeah, but sentiment can matter. And that's where my argument goes. I think people that are profitable using TA, you can randomize their entries and exits, because I think people want to see patterns where they can't see patterns. And in hindsight, always a pattern gets created. So for example, a resistance will get blown up. Okay, sure, if there are no sellers, then it will get blown up. But you can also have a double top. So in hindsight, there's always a pattern that people can fall back on, but that doesn't mean it caused that kind of price event, because it's almost impossible to predict. TA has no predictive power, and there's zero proof that the TA that you're using has any predictive power.
Good. So this is a wonderful teaching opportunity. So first of all, to say my approach is simple, it's just an unbelievable compliment. So I would thank you for that, because the best TA is simple. People tend to use too many indicators, too many moving averages. They add the RSI, MACD, stochastics, and they really do anything to avoid looking at the really most important thing, which is the price and the price relationship to support and resistance. Trends are not made by TA. I don't know what that means. I don't know how to really respond to that. I mean, the trend is the price over a period of time moving in a certain direction, and you have indication. TA is not necessarily about predicting. It's about, this is what I said in the beginning, and I'll circle back to that. TA is about identifying the trend and understanding where it may strengthen or weaken in the future, right? It doesn't have to predict anything, but it can tell you when the boat is turning around. It can tell you when, for example, you talk about a double top. Some of the best, first of all, it's not about identifying a pattern, algo. It's about trading it correctly and understanding, for example, when a reversal pattern fails, that's a big momentum clue in the other direction, right? And it's not just a double top, it's the construction of the double top. Does the second top have a higher high? That's what we had in Bitcoin. That's why we had unbelievable technical sell signals on Bitcoin around the top. That's why it's pretty easy to nail the top on Bitcoin with technical analysis. So it's not just about identifying a pattern, it's understanding how to trade the pattern. Okay, stimulus, COVID crash, Federal Reserve, just talk. It's noise. Show me the price. If what you're telling me matters, the price will break support. It will hold resistance. It will break, that's all that matters. And there's some wonderful fundamental analysts and fundamental traders. If that's what you do, I respect that. Could I have a computer automate my system? Maybe. I've never tried. I don't care. I enjoy doing what I do. It's a lot of fun. I look at the chart 17 hours a day. I have a really good feeling for it. And it makes it easier to understand and how to contextualize the volatility. So simple TA, that's a compliment. It's a compliment, but you have to execute it correctly. You have to, and then you have to manage yourself as a trader. You have to manage your emotions. You have to not get frustrated. You have to not go on tilt like a poker player. Can't let yourself go on tilt. So that's how I would address those points you just made.
Yeah, I mean, I think we're just going to run around in circles at some point. I mean, whatever you mentioned, you can literally just put all your data in a neural network and come out with a very profitable trading strategy. If everything was just strictly rule-based and everything was just did rely on patterns without including outside factors that actually drive the price, then everyone would be rich, and the machine will outperform.
The market knows, brother. The market knows more than we do.
No.
It factors all that in. That's all that matters is the price. You can talk, but at the end of the day, the price will hold support or it will not.
Yeah, but it depends. Like an event will decide if it holds support or not. That's the whole point I'm making.
Maybe. But no, supply and demand will determine that. It's supply. Are there enough buyers to defend a demand area? That's what
So just very quickly, it may help to contextualize this specific point. So I mean, this goes to both of you. Maybe we start with Algod. To what extent do you think news events are quote unquote baked into the price? Because my understanding is, at least on crypto Twitter, you basically get a very extreme range. The first is that every single bit of news, foreseen or unforeseen, is baked into the price in advance. So even if there's some sort of secret FBI raid on a compound and the stock ends up dumping, it's like, TA predicted that because there was like a bearish divergence or something like that, which was like one end of the extreme. And the other end of the range is basically the opposite of that. That there's like fully efficient markets to some extent, and there's no predictive power there whatsoever, and it's all sort of catalyst, flows driven, whatever it may be. So when it comes to chart analysis, maybe start with Algod. I mean, I can imagine where you're going with this, but can charts, what predictive power do they have when it comes to news? Or it's like, I guess it's a cattle. What came first, the horse or the whatever, the carrot?
I mean, it obviously has like zero predictive power to news. I mean, it would be ridiculous to do TA on a chart and then say, oh yeah, this is why FOMC was bullish or bearish, right? I think what you're referring to is, for example, when there are like events like FOMC, there are like a certain amount of probabilities what the market wants to price in and whatnot. And obviously the market is inefficient, so there are like, especially crypto is quite inefficient, so it's really hard to have like a proper understanding how to play those inefficiencies. But imagine if everyone is expecting, or like 70% chance of like a 70 BPS hike, then obviously of a 75 BPS hike, for example, a few months ago, it was quite bearish. So the price will already be bearish, and then it will go to support or resistance or whatever you want to know. But if then you get like a 100 bips hike, obviously it will just fall through. So yeah, the market prices stuff in, but like I don't see one single good argument on how TA can ever predict than the news event playing out.
Go ahead, Cheds.
So I mean, I'm just kind of thinking here, and so a lot of it boils down to, and he said something that was really interesting and stuck out. He said the markets are inefficient, and for me, I mean, I would just completely disagree. I think the markets are efficient. So just once again, we're back to a TA versus FA debate, and it's not like the first time this has ever been done. So I mean, if we're at that point, we're probably not going to agree. I'll answer your question, and then Cred about what charts can tell you about the news. But he keeps coming back to like the charts predicting. It's not about predicting it. It's the chart helps you contextualize volatility when it happens. Your understanding of the trend and what it means for the price to pass certain checkpoints, right, and to go to certain levels, and the way in which it gets there, the speed of movement. And we get all these little breadcrumbs of signals, candle clusters, wicks, all these things. It helps you contextualize it. It's not about predicting it. It's about helping you deal with new information when it comes in, again, so you can define your risk. That's the most important thing. You have to define your risk, right? What was it? 1270 Cred. We went 1270 on Ethereum to 2K on that Ethereum 2.0 hype, and then like the news comes out and we just slowly fizzle away. I mean, it's buy the rumor, sell the news. The market is efficient, right? Semi-strong, efficient market hypothesis. All public information is baked into the chart. I don't think private information can be baked in. I believe in the semi-strong version efficient market hypothesis. And you'll probably tell me I get something wrong there because I know you're, well versed in that type of stuff. But it's baked. The market is baked in. Show me ask me the news. I'll show you the chart, and you can see. Okay, there's increased demand. We're breaking a lost resistance level, right? We're kind of flipping things around. The news comes out, you see it, and then fizzle out later. So
if you think the market is efficient, Kat, Chad, what I don't really understand is, like, especially now, we just found out that pretty much FTX was popping up the market in a very manipulative way. How can you think it's ever efficient? That's a clear sign of like a market inefficiency. Before, like a month ago, we didn't know. So you're like thinking that, for example, imagine I deposit like 1 million BTC on FTX, and they will buy incrementally their shitcoins they want to pop up, or like they want to buy a BTC with that money because I didn't get credited. You're telling me that they will follow the chart to buy these things? It's information you don't have, and the chart won't display those kinds of information.
Why do I need that information? I just need to know if price holds support or not. You don't have to make it that complicated. I mean, that's literally all it boils down to. You have a trade, and is my trade idea still valid? You don't have to get all song and dance. I don't need to write a 100-page thesis. Does the price hold support? Is my trade idea still valid? It's all it boils down to, right? Was he propping up the market? Great. I don't care. Did the price hold support? Did it get back up above the daily MA200, or did it drop to that support zone at 12K? That's all I really care about. I don't waste my time on all this like hyperbole outside of the chart and trying to like explain stuff. I don't need to. I just want to know, does price hold support?
Okay, cool. Let's just agree to disagree on that. I think I can easily prove you're wrong, and I hope we will get at the end of the debate on that part. And
only the market can prove me wrong, brother. Only the market can prove me wrong.
Okay, sure. So imagine you have a system, right? Do you believe a single system can work across all markets? So, for example, you have like a pattern. Let's assume you have a pattern when it reaches support or resistance. You do something. You can choose what you do when it reaches support or resistance. Do you think the same system that you use on Bitcoin works across all markets?
It works in any market that's liquid, a fully functioning market with liquidity and supply and an ebb and flow and supply and demand. Everything that works in Bitcoin works in Forex. It doesn't matter. And it's all that matters is how you execute that pattern. I can identify a pattern, but where's my invalidation level? Where's my trigger level? If there's liquidity, it works. Like in penny stock markets, a lot of TA doesn't work because there's no volume. There's no liquidity. Any market that's freely traded and has liquidity, you can use Eastern or Western technical analysis. You have a trend, and you can identify where the trend strengthens or weakens. It doesn't matter what market it is.
I can say with 100% certainty that you're talking bullshit at the moment. A single system doesn't work across all markets.
No, you're talking system. I'm not. You keep using the word system. I'm talking about trend analysis.
Okay,
the price has a trend.
The rule-based trend analysis, which is pretty much a system, but sure, let's use your words. It's impossible to work across all markets, and I think everyone with some trading experience in this
markets
knows I'm right.
Wait. All markets or liquid markets? All markets or liquid markets?
Sure. It won't work on 5 markets, or probably even.
Give me some markets. Name one market TA won't work on. Just name one. Pick one.
I mean, let's say your TA system you have on Bitcoin, it won't work on oil.
On oil, that's wrong.
Okay, sure.
Doesn't matter. Doesn't matter.
What you're doing now is giving subjective opinions while not being fully transparent about. Those are subjective opinions. I can prove you're wrong after this debate. We can go in depth.
Let the market prove me wrong.
No.
You're not subjective.
Listen,
you're just as subjective as I am.
Hold on. I think the reason you might end up going around circles in this point is because there might be a useful distinction to be made between a trading framework and a trading system. So, for example, if someone has TA as a trading framework, how they execute that and the specific system associated with it can vary asset to asset or kind of sector to sector or whatever else. So I sort of think that's why you're maybe talking across each other on that point. Because it wouldn't be the same, like, if this candlestick forms in Bitcoin, I take this trade, and that means if I see the same candlestick in this market, that market, I do the same thing every time. I think you actually disagree as much as you think you do. I think it's a framing type of thing, that you kind of take your TA approach to all your markets, but the system you employ as a TA trader may not be the same across all assets. I think the disagreement might be slightly exaggerated.
No, not even that. Even the framework, right? Like, let's assume he uses his candlestick framework, his Japanese candlestick framework, and he tries with the same rules or whatever, like how the framework looks like. I don't know. It's very basic patterns, pretty much. And if he applies that to numerous markets, and let's assume he's still profitable on Bitcoin, he's still not going to be profitable across all markets. Even all these patterns that they listed, I'm even willing to give in that Head and Shoulders might work on Bitcoin. I think it's nonsense, but for the sake of the argument, I think it can work. But there's no chance that will work across all other liquid markets.
I mean, you have to believe trends don't exist, and we're not going to agree on that, right? If there's a liquid market and you have a history of prices, you have a trend. And you have, again, you can identify the trend. Where does this trend strengthen? Where does it weaken? How am I going to apply my risk? I mean, if we don't even agree on like some basic tenets of price action, you think the market's inefficient. I think it's efficient. I don't think we're really going to agree, and that's okay. For the benefit of debate, we shouldn't agree. We should have vastly different opinions, and that's fine. I want that, right? We need traders to have different opinions and different styles and different philosophies. But if you're going to tell me that TA doesn't work in a liquid market, I'm going to just disagree.
Okay, sure. So can you tell me why you think, for example, crypto is efficient, while we just found out that pretty much the whole market was propped up? It was pretty much inflated by FTX. How can that make crypto as a market efficient?
What makes that inefficient? What's inefficient about that? The price sets a trend. It's still in a downtrend. It has not reversed that trend. It had a 150-day support range that it just broke. Like, what is that? What about what you said means that there is no trend and that you can't use trend analysis? What in that?
Because those factors are caused by events we can't control. It doesn't make the market
that's noise. That's outside the chart. You still have to trade based on the four corners of the chart. Like, I get wanting to, like, yes, TA can be complicated. It can be confusing. It can be frustrating. And we want to look for reasons outside the chart to explain things, but that's a crutch. At the end of the day, you still have to structure your risk based on the trend, based on the price. It's the only truth. Everything else is noise and speculation. When we were at Bitcoin top, you wouldn't believe the FA. You wouldn't believe all the stuff people were talking about. We're going to 100K, we're going to 250K. But the price has to hold support, and it didn't. The price made a new high. It immediately lost it, triggering a short signal, a momentum reversal. And that's pretty much been the trend since November 11th.
Also, just very quickly, I think the reason this point might be almost boring is because from a purely TA point of view, presumably, and this is me half taking my moderator hat off, and this isn't an endorsement or anything, but there's no, like, from a pure TA point of view, there's no real, this is sort of maybe to contextualize Algod's question, TA probably wouldn't distinguish between the fake demand of Alameda propping something up versus organic, natural buying demand pushing the market up.
Exactly.
I think most chart people would just see the green candles and make inferences from that as opposed to the source of the demand. I do want to kind of pivot just to one quick question. We could start with you perhaps, Algod. Is it your view that, and I've got a hard ball for Cheds as well, don't worry, but is all TA the same? So, for example, we have a lot of really, if you think FA, for example, just picking randomly is a valid framework for trading or sentiment analysis or whatever, by definition, there are going to be people who have some really shitty FA and really shitty sentiment analysis, and you wouldn't use them as a kind of advocate for the entire practice. Do you think that you can reach a point with TA where it's tested enough, sophisticated enough discretion, enough experience, everything else where it becomes a valid strategy? Or is there something about market structure and microstructure in general that means it's a sort of dead experiment from the outset? Like, can TA be good enough to cross like a minimum viability threshold?
Yeah, thanks for this question. It's a good question. So basically, I invested into a company. It's non-crypto, so I'm not going to shill here. It's fintech, and they have like a system that pretty much is based on TA, but it's very sophisticated, and they have like all complex correlations we can't really understand ourselves, or we can't really see them by the eye. So technically, that kind of thing is TA. But what you have to understand, like when you have like a model like that, you have to work on it daily or weekly to make sure the correlations are still intact. It's an ever-moving system. It requires a lot of work, but like the TA that Chats is using, and that's why I want to distinguish them in my opening stuff. is that he has very easy rule-based TA that is not adapting to market conditions. Market conditions change, price action changes. For example, in the 1980s, a lot of things were still retail. Now in 2020, the majority of the volume is by robots. So obviously market structures change and you have to adapt your systems. All these people, they are pretty much fighting for the same retail flow and trying to ARB out inefficiencies. So to TLDR my question, yes, I believe TA works. No, I don't believe the majority, 99.5% of people on Twitter that are doing TA, I think is complete nonsense.
Cheds,
I agree about that. I agree with this last point, by the way.
Yeah, my hardball question to you will cross over with this. So it's a nice segue. So from observation, it seems to be the case that the use of TA is inversely correlated with sophistication. So if someone who has no idea about markets, no idea what they're doing, no experience, no training, nothing, it's very easy for them to start with TA, go on Baby Pips, or God forbid, go on my channel or whatever else. And it's so accessible and so easy to grasp at the very least. And then what you see on the other side of the spectrum, Folkvang, Winternew, Jump, Tower, none of these trading firms in the most competitive spaces give any weight to TA. So on the one hand, for observation, you've got participants with no background, no experience, etc., flocking towards TA on account of its accessibility, and then that number seems to fall off really drastically the more kind of sophisticated you get in the trading space. If TA were to be an efficient way of trading or looking at the markets, you wouldn't perhaps expect that type of distribution. What's your explanation for it?
So from what I understand, do not all the major investment firms have technical analysts? If you're telling me that they don't, that's new to me, if that's what you're saying.
Well, I think I'd be surprised, at least on the market making front, I'd be very surprised if technicals played a large part of their systems or trading. I think even on the sort of discretionary fund, etc. stuff, they might have trend analysts, but I at the very least would be surprised if pure chart technicals inform their reasoning to like a very large degree. Right. Yeah, I think you could phrase it as a sort of quantitative versus TA skew, if you like. But in general, I'd like to hear about that relationship.
So if you're asking like a market maker, they make the market. They don't need to make TA because they can just kind of deal with arbitrage. And I'm sure you know a lot more about that. And I enjoy listening to you.
They take directional risk, just to clarify.
What's that?
They often, like in the majority of the cases, they take a small directional risk. So they're doing like statistical arbitrage and stuff.
Yeah.
And other
so
stuff.
I think it's I guess I'll address it this way. I think it is. I did an interview with Peter Brand on my YouTube, and I'll plug that because it was an awesome interview. And he talked about how a little bit of knowledge is dangerous. And I think I mentioned that earlier in the debate, where you see a trick and you think it works. And so a little bit of knowledge is dangerous. You see it with Baby Pips, you watch, Cred's, something from Cred's excellent educational library, and you go and you try to apply it. But if people, they will fail because they have no experience. They're not, properly managing their risk. They're not managing their emotions. And so that's the danger. I honestly don't know a lot about what market makers do, what big investment firms do. I literally micro specialize on the Bitcoin price. That's what I do. I trade it. I study Eastern TA, Western TA. I write about it. So this is what I know about. And if you're telling me that JP Morgan or some of these big desks, these big, folks don't have technical analysts, I would think that's probably hard to believe. But I would, something I would take your word at. It's, the way you're phrasing it is interesting because the idea is that, new traders flock to TA, but once you've been in the game, you don't need it. I don't know if that's the case. I think it has to be to each your own. I would think all of those firms, whatever, here's what I would say. No matter what, it doesn't your fundamental theory. So let's say they don't use TA and they use fundamentals. They still have to define when that fundamental idea is wrong. They still have to pick a point, a failure point. Otherwise, their position won't survive. So that's still TA. That's TA based on here's where my idea fails because I lost support. And TA doesn't have to be an Elliott wave. It doesn't have to be, it doesn't have to be a broadening right angle top or like something weird. It can just be here's a support level where the price has told me is really important, and I am bullish above and bearish below. So it can really just be that simple. And I guess that's how I would answer your question.
Okay, so can I counter a question? So do you think people with several billions of dollars or even like 50 to 100 billion of dollars are less informed on what works in the market than you? Because if your TA would work, why wouldn't they hire people like you?
Show me that they aren't hiring people like me. Where's your evidence that they aren't?
I mean, I'm not even going to argue with
then
that.
don't. I mean, don't make an argument if you don't want to continue with it. I mean, if you want to make the argument, show me the evidence that these firms are not using technical analysts. And I don't know more than them. I don't know more than the market. The price knows everything. That's the whole point. They know that as well. Or they're like you and they believe that the market is inefficient. I believe the market is efficient, and that's what we kind of keep getting back to.
Okay, sure. So I have like one more question, because otherwise it's pretty hard for me to make decent arguments. But yeah, anyways, so what I want to do is, for example, you give me a strategy regarding your kind of candlesticks, or you try to explain me your framework, which is quite easy to implement, and I can use it and I can backtest it across different markets, and we can see if it works or not. It's very easy. No emotions are involved. We can see how good your system works. And yeah, I think what I really want to see is proof. All the things are very subjective. I don't see any transparency. I don't see any trades being taken. I don't see any results other than you just say, yeah, I think it works. And
that's why I have a lot of public trades. I have a lot of
bordering on irrelevant. Rein it in a little bit.
Yeah. I have a lot of public trades. I probably only put out about one a month, and I mean I killed it in 2021. I've been having a nice 2022 working on this book, but I put out at least one public trade a month.
Could you answer the specific question about would you be willing to work on automating or systematizing your strategy to see how it would perform in quantitative setting?
For fun, but is that going to answer the question? Is that something?
Yes.
I am actually. It's interesting you mentioned that, because one of the premises for book 5 that I'm doing, which is a poker and trading crossover book, is I'm coming up with a tier system. Like in poker, they have pocket aces is tier 1. I'm coming up with a tier based system, and so I'm starting to think about that. And for example, one of the best patterns is like an island bottom, right? Gap down, some type of small body usually, and then a gap up, right? Usually it's a pretty strong reversal signal. So that's like a top tier type of setup, or like an invalidation of a head and shoulders, right? You can do all that back testing. And if you really want to sit down and we can try to come up with a really like if then, like great. And maybe that would satisfy you in terms of the lens at which you're viewing everything through automation and through a very specific rules-based strategy. I mean, that's fine, but that's not like what I do and what is really honestly that interesting to you. But if that's to me, but if that's something like, sure, I would do that. But it's not going to determine whether or not trends exist. It's not going to change my mind about support and resistance.
But how can it not determine if it works or not? Like if I can prove it's not correct, like how can your simple rule-based pattern recognition or system based on it, like
how many years of data do we have to sit around and hold hands and be friends before we say Bulkowski's wrong with his 30 years of data? Like, what is that, right?
We can do like for a few years across a few markets.
So we got to move in and be roommates for a few years while we come up with a strategy. I mean, what are we doing?
You can just backtest.
So this might be an interesting thing in terms of, and this goes to both of you. Perhaps Algod, you can start. What would be the single most compelling piece of evidence that would change your mind? And this could be something you run, or something you see, or from observation, or some sort of study. What would put look, your position isn't as extreme as it has been in some of the Twitter places. It seems that like with sufficient sort of testing and sophistication and experience and taking the matter seriously, some version of some chart-related endeavor that might be called TA might possibly work for some period of time, right? Something like that. So in order to take you to like a stronger position, with higher conviction or a broader mandate when it comes to the efficacy of TA, what evidence would you need to see to kind of pull you closer to Cheds, so to speak? And then the same question will go to you, Cheds. So like, what would you need to see to suggest that this whole experiment of charts and stuff is nonsense?
Okay, sure. Thank you. So I think, so to clarify, we're talking about the non-sophisticated TA, right? I already clarified myself on the more sophisticated TA, which is not possible with the human eye. So what I want is like a study of multiple people that take, let's say, 1,000 trades across different markets, and then create like a lot of data points. And the only thing they're getting is raw price data. It's actually incredibly easy to test out. And if we see some patterns work across multiple markets, which would amaze me, then I can definitely then I'm willing to change my mind on it. But I'm just sure it doesn't. because I already tested it in the past.
And Cheds, what would change your mind with regard to TA being perhaps not as, or even just markets being not as efficient as you thought, or the practice of TA being, nonsensical?
I'd have to, and it'd be weird because I've literally studied it, professionally and read textbooks and practiced and used it for a long time. I guess I'd have to like consistently start getting it wrong, like over and over again for a period of years. I'd have to like every time something should work, just not work, and then it would have to happen over and over and over and over and again for many years. Which I agree, which I think is pretty unlikely given how closely I pay attention to the price. So I don't see how that could happen because the price is all that matters. I mean, so I'd have to just keep getting it wrong for a long time, I guess would be my answer to you.
I mean, that's again very subjective, right? I mean, yeah, I'm not even sure what to say on it. You could have just said the opposite of me, and we can just backtest your system, and that should change your mind entirely, instead of just your subjective opinion on the matter or like your experience, because like personal experiences don't make it doesn't make it working or not.
Gentlemen, unless there are any follow-up threads to that, perhaps maybe a few minutes of summary each, if you'd like, and then we can wrap up what's been a surprisingly civil and illuminating debate. We got to the core of the efficient versus inefficient markets. We got some criteria for what would change your mind, what you'd expect to see if TA did work, certain nuances in applying it to a single market, several markets, evolution of market structure. It's all been very good. So if we can hear a summary, perhaps starting with Algod, and then Cheds will round us off. About 5 minutes, up to 5 minutes would be great, but take however long you like.
Okay, sure. I will do just a short summary. So from this discussion, I think my answer didn't really got replied on why machines would be inferior compared to humans. I think he has a lack of understanding how these patterns work, or the math behind some of the indicators he mentioned. And even if his method would work, it would be incredibly easy to automate it. So I think that's where the whole logic is flawed, right? Like the TA you learned on baby pips is very rule-based. And even if you have a system that works, it won't work across markets. And I'm inviting everyone to disagree with me and do a test, a back test or forward test it on multiple markets. It won't work. Otherwise, all the biggest quant desks in the world would abuse it. If you think people at Renaissance would hire people that look at charts all day and try to find patterns with the naked eye, those are the people that have the most money, and they're not doing it. Why do you think an average Joe would be able to pick it up on baby pips and somehow be profitable when it's very easy to learn? And yeah, I think that's my ending statement. I really hope people have now a better understanding of why TA can't work, because it has no predictive power. There are so many outside factors that you can't calculate in your trading system. And I think that's my last thing I want to touch on. He keeps comparing trading with poker, but poker has a limited amount of like probability. Of course, they have bluffing, but it's still less complicated than an ever evolving market that we are currently in. Yeah. Thank you for hosting, by the way.
Cheers. Cheds, over to you.
Yeah. So first of all, really happy to talk to Algod. Like when we first tweeted, we ended up blocking each other, and it's because it's like you can't have a real discussion over 140 or 280 characters. Maybe I get emotional because I'm passionate about what I do, and so it's not very like productive. It's just, oh, you suck, no, you suck. So I'm glad we did this, and appreciate you, Cred, doing this. I'll start with his last point about poker. The reason I mention it is because we have data. You have Thomas Bulkowski, who analyzed both classical charting patterns and candlestick charts. And so I often use that metaphor. That's why some patterns, like an ascending triangle, is one of your best patterns, because it has this, again, off the top of my head, something like a 75% chance of a bullish continuation. And so it's not that it's predictive that it's going to go 100%, but it's something that it's likely. It's a good bet. That's something that's the price structure that you should be interested in. Okay. And it's like poker, not because you can bluff, but it's like poker because ace will probably beat 2-2, but it deuces, but it can lose to it. It's only 84%. So a lot of this stuff is probabilities. It's about looking for an edge. what is TA? And I'll just go back to how I started. It's trend analysis. It only works in a liquid market where you have an actively traded market with plenty of volume, and then you have a trend that you can identify and understand where that trend strengthens or weakens. I hear a lot of talk about you can't predict the Fed, you can't predict, crazy things happening, but you don't have to. You just have to understand what support and resistance are and what it means when the price does X, Y, and Z. What does it mean when the price recaptures a lost support level? That's a momentum clue that you should pay attention to. All right. That's why TA is important. It allows you to structure your risk, which is the most important thing as a trader. You need to know where your idea is invalidated. And most people who are terrible at trading, they ignore that. They say, oh, my trade idea failed. I'll just stick around. I'll average down. I'll keep adding. And they add to their losers. They don't want to take a loser. A small loser becomes a big loser. Most people with TA, they try to do too much. I have the MACD, the RSI, I have the OBV, I have the AD, I have the Williams R. I have all these things. And then I'm going to come up with a really complicated way. And it's just too much. It's really just about the price either holding support or not. And that's the answer to too many indicators and the answer to all that crazy stuff outside of the chart. Is the market efficient or is it not efficient? And how can we explain if TA works and FTX is propping up the market? I don't care. Did the price hold support or not? It eventually didn't. It lost it. And that was a significant break of 150-day price channel. That's significant. You really should pay attention to that. So I don't care what's behind the volume. I just want to know the price, right? For me, that's the most important thing. Do I want to automate my strategy? Not really. It's not something I'm into. Some people who are programmed, maybe you're a programmer mind type of person. That's great. I'm more of an artist. I'm a writer. I'm a poker player, right? Sometimes I like to wing it. All right. So that's just my style. The market needs traders of all different styles. Okay.
1 minute.
It's not about predictive power. It's about defining your risk. That's how TA can be a wonderful and a really important tool. And I've enjoyed talking about it today. And I've been want to thank both of you for taking the time to be part of this discussion.
Yeah, awesome, guys. Thanks very much. I mean, if you enjoyed listening to the debate, go leave a like on the original tweet. Maybe we'll do more of these in the future. If you weren't happy with the guests, I mean, my apologies, obviously. But rather than complain, why don't you just tag your 2 favorite people who disagree with something? Maybe we can have them on for a similar format to discuss something else. I appreciate the speakers for their candor and civility, as difficult as that may be, on Twitter. I hope everyone has an excellent, what day of the week is it? Wednesday? Something like that. I hope you have an excellent midweek. And yeah, trade safe. Don't let Jerome Powell blow you out, all that usual stuff. And hopefully we have more debates to host in the future as well. I might do a little, just for the sake of the recording, after stopping this, I might prop up a new space very quickly to give my own thoughts and reviews or something like that. But yeah, thank you. Thank you to everyone for listening and all that type of stuff. I'll shut the fuck up and end of recording. Goodbye.
All right, that was it. That was the epic debate. Does technical analysis work? I had been going back and forth with this guy for quite a while on Twitter, and he kept saying, "Why won't anyone debate me? Why won't anyone debate me?" And there it is. So he has his answers. We probably didn't, convince each other, but that's not the point. The point was for us to hopefully add value. I thought of this as a good teaching moment, and hopefully it was, and added value, and hopefully you learned something, and that's what it's all about. So anyway, thanks for listening. Thanks for watching, and hope you have a great rest of the week. I will talk to you soon. Bigcheds out.